Imagine getting paid regularly without lifting a finger. Sounds like a dream, right? Well, it's possible through dividend stocks. In this video, I'll show you step by step how to build passive income using dividend investing, even if you're a complete beginner. Let's unlock your path to financial freedom. Welcome back to the channel, where we help you achieve financial independence. If you're new here, make sure to subscribe because today's topic is all about passive income through dividend stocks. I'll break it down into simple steps, share tips on picking the best dividend stocks, and show you how to start earning steady cash flow from your investments. Whether you're aiming for early retirement or just want extra income, this guide is for you. Number 1. What are dividend stocks? Let's start with the basics. What are dividend stocks? These are shares of companies that pay a portion of their profits back to shareholders in the form of dividends. Think of it as a thank you for investing in their business. The best part? You can use these dividends as passive income or reinvest them to grow your wealth faster. Some common examples of dividend-paying companies are Coca-Cola, ticker CO, Johnson & Johnson, ticker J&J, Procter & Gamble, ticker PG. Dividend stocks are like planting a money tree. You invest once and watch it grow while earning income along the way. Number 2. Why dividend stocks are great for passive income. Dividend stocks are one of the best ways to earn passive income, and here's why. 1. Steady income. Companies pay dividends quarterly or even monthly, giving you regular cash flow. 2. Growth potential. Many dividend-paying companies are stable and have a track record of increasing payouts over time. 3. Tax advantages. In the U.S., qualified dividends are often taxed at a lower rate than regular income. For example, if you invest $10,000 in a stock that pays a 4% annual dividend, you'll earn $400 a year, without selling a single share. That's just the beginning as your portfolio grows. Number 3. How to start building a dividend stock portfolio. Now let's get into the step-by-step process for building your dividend stock portfolio. Step 1. Open a brokerage account. Choose a platform with low fees and dividend reinvestment plans, DRIPs, like Robinhood, Fidelity, or Vanguard. Step 2. Research dividend stocks. Look for companies with a history of consistent dividend payments, at least 5 to 10 years. A dividend yield between 2% and 6%. Too high might be risky. A payout ratio below 60%, meaning the company isn't overextending its profits. Step 3. Diversify your investments. Spread your investments across different industries, e.g., healthcare, utilities, consumer goods, to reduce risk. Step 4. Reinvest your dividends. Use DRIPs to automatically reinvest your dividends and benefit from compound growth. Over time, this strategy supercharges your portfolio's growth. Number 4. How much money do you need to start? One of the biggest misconceptions is that you need thousands of dollars to start. But that's not true. You can begin with as little as $100 and build from there. Here's an example. If you invest $1,000 in a stock with a 4% annual dividend yield, you'll earn $40 per year. Add $100 a month to your portfolio, and with reinvested dividends, you could have over $15,000 in 10 years, even with average market returns. The earlier you start, the more time your money has to grow through compounding. So, don't wait. Number 5. Common mistakes to avoid. Before you dive in, here are some common mistakes to avoid. 1. Chasing high yields. Stocks with extremely high dividend yields, 10% plus, are often risky. Look for sustainable companies instead. 2. Ignoring fundamentals. Don't invest just for the dividend. Check the company's financial health, growth potential, and industry trends. 3. Lack of diversification. Putting all your money in one stock or sector can lead to big losses. Spread your investments to minimize risk. The key is to think long-term and avoid shortcuts that could hurt your portfolio. Number 6. How to make dividend stocks truly passive. Want to make dividend investing truly passive? Here's how. 1. Set up DRIPs. Dividend reinvestment plans automatically reinvest your payouts, saving you time and helping your portfolio grow. 2. Use tracking tools. Apps like Personal Capital or Dividend Tracker help you monitor income and performance without constant effort. 3. Automate contributions. Set up automatic deposits into your brokerage account to grow your portfolio consistently. Once these systems are in place, your portfolio can work for you in the background, building wealth while you focus on other things. And there you have it, a step-by-step guide to building passive income through dividend stocks. Remember, the key to success is patience and consistency. Start small, reinvest your dividends, and watch your portfolio grow over time. If you found this video helpful, give it a thumbs up and share it with someone who's ready to start their investing journey. And don't forget to hit subscribe for more tips on financial freedom and passive income strategies. Until next time, happy investing.